Greetings, members one and all of the Salivation Nation. According to a report, coronavirus mining shutdowns have had a greater impact on silver production than gold. Let's explore. This comes to us from Kitco, and it is quite interesting indeed. All of the COVID-19 shutdowns have impacted silver mining production the most, according to Global Data Report. The coronavirus pandemic has forced governments across the globe to shut down many non-essential businesses, and in some cases that meant mining. The latest report from Global Data looked at different mining sectors and how they have been affected across the globe. Silver fared the worst, while gold was hurt the least out of all the major mining sectors the report looked at. There were temporary shutdowns introduced by more than 1,600 mines across 32 countries as of April the 3rd. That is quite telling. Since then, the total mine shutdown have been already dropped to 729, Global Data added. Aside from temporary shutdowns, the mines that were working were functioning at reduced capacity, limiting the number of workers on site to minimize the spread of the virus. At the end of the day, silver production was hit the most by temporary shutdowns. As of April the 27th, there was an equivalent of 65.8% of yearly global silver production still on hold. Wow. Companies that withdrew production guidance included First Majestic, Hochschild, Hecla, and Endeavor Silver. You remember I posted a video about the shutdowns in Mexico concerning this and others. In comparison, 32% of uranium production, 23.8% of zinc, 19.5% of platinum, 14.6% of nickel, 14.4% of diamonds, and 12.7% of copper, 12% of lead, 10% of manganese, and 9% of gold were placed on hold, said Global Data senior mining analyst Vineth Bajaj. Interesting indeed how gold was affected the least of all those other metals out there. Lockdowns, though, remain in place in Peru until the 10th of May, Mexico until the 30th of May, Bolivia until April 30th, which is just 2 days from the recording of this video, and Namibia on May the 4th. CPM Group also ran calculations to see how badly the silver mining sector was hurt, estimating that 21 million ounces of output was lost so far. And to couple that with the big demand because of the panic of this thing and less product coming through means there really is less silver right now to go around, and especially for the likes of bullion, round, and coin demand. At the very least, based on the current duration of mine closures and the daily output in 2019, the mine closures in South Africa, Peru, and Mexico should result in a lost output of at least 21.1 million ounces of silver, CPM Group said in its Silver Yearbook 2020 released Tuesday. From a price perspective, silver has been lagging behind gold this year. But I want to do something else for a perspective in terms of mining, because I've heard that about 850 million ounces of silver are mined per year. In fact, we can see here from Statista some statistics about global mine production of silver from 2005 to 2019, and we can see that 2019 was a record year compared to all these other years, going back down to 2005. Fascinating to see that the demand for the metal is growing and more mining has occurred. So 2019 brought us to 27,000 metric tons. Translated, that is 868 million ounces. So we actually did produce more silver last year than 850 million ounces that I had suspected. So 21 million may not have as great as impact down the road, but again, demand is rising for the metal, especially on the investor side, and we'll see how that translates with the greater production. So if we lose that amount, 21.1 million ounces, it may set back some demand, and demand may outpace supply a bit, but compared to 850 million ounces, it may not be that big of a deal, but we'll see if that is the numbers here. Panic mass sell-off triggered by COVID-19 dragged silver prices to 11-year lows in March. We all remember that when that happened. Since then, the precious metal has recovered, but is still lagging well below February highs. Spot silver last traded at $15.16, up 7 cents on the day, while May silver COMEX prices were last at $15.25, up 52 cents on the day. In fact, as of the recording of this video, we're seeing the prices, just again, $15.37 there. So yes, they're up a little bit today. Analysts see a lot of potential in silver as demand is expected to pick up as the precious metal embraces a new position on the commodity world and infrastructure precious metal. That is interesting indeed. And one thing too, silver may not be gaining a whole bunch, but it's not losing in terms of the actual purchase price that most of us are paying for silver. We're still paying about the same price, if not a little bit more, than normal in this particular situation. Where the pain is when you go to sell it, because even though bullion dealers are paying over spot, it's still well below some of those levels that we had come accustomed to before the big drop off in price. In the short term, some analysts see good upside potential for silver compared to gold. Given silver's relatively healthier spec positioning than gold's historically high gold to silver ratio, we think the silver prices could play some catch up and outperform gold prices in the coming months. Orchard Research said in a Seeking Alpha post earlier in the week. The fundamentals supporting silver are very solid, Wheaton Precious Metals CEO Randy Smallwood told Kitco News last week. The fundamentals behind silver are about as good as I've ever seen. The industrial demand and its applications are truly important to society. Its high-efficiency electronics and its antibacterial applications, also solar panels, silver plays a role in that, and the world is getting more and more concerned about efficiencies. We want the best performance and least amount of material, Smallwood said. So it is very interesting to see how this will play out with silver prices. I believe if the mines can open up here relatively soon or even on schedule, we may start to see and ramp up supply to meet at least investor demand. But who knows, investor demand could, and by investor demand, I mean those of us who use the metal to hedge against economic instability, we may still see that demand increase greatly. We'll find out. We'll see how it all plays out. Silver does lag, obviously, and normally does. But I think in this particular case, we're sort of in uncharted waters here. And there has been unprecedented demand for both silver and gold. And gold, though hit the least, still has very high premiums. And why is that? Because there's a lot more demand for the metal out there for the premiums. And, of course, the concern is playing on not only the paper spot price, but also the demand for the physical metal. And I believe we're seeing some of that in the silver markets too. But it'll just be very interesting to see how it plays out. But interesting data, interesting report indeed, that silver was hurt the most. I mean, those numbers are staggering for sure when you think about it here. So there you have it. Fascinating news. Post your thoughts below. Would like to extend a multitude of gratitude to you all for watching. And one final reminder that, these numbers definitely don't mean that silver is just going to take off anytime soon or anything like that. Or I'm bullish on silver, but I don't necessarily think that we're going to see normal gold to silver ratios for quite a while. We still have to be patient. In fact, by the time you watch this video, silver prices might be down. Let me know if I'm right in the comment section below if silver prices will go down by the time you watch this video. Again, a multitude of gratitude you all for watching, and encourage you to please rate, share, comment, and subscribe.